Welcome back to another episode of Reinventing Finance Podcast. As usual, I have the great pleasure of being here with my lovely co-host, Ron. Ron, how are you today?
Hi, fantastic. I'm super happy to be inside. Outside, the world's coming to an end. There's a snowstorm. So happy to
But
be with you and with you, Vincenz.
so the internet counted between Berlin, Hamburg, and Munich still seems to be going, which I guess is the benefit of underground cabling than overground cabling. But as usual, we're not all by ourselves. We have with us Vincenz from Baobab. Vincenz, pleasure to have you here. How are you today?
Pretty good. I mean, the snowstorm is hitting Berlin probably pretty soon, but so far so good.
Awesome. For those of our viewers, listeners who might not know you or your company, could you just briefly give us an introduction about yourself and what you guys are doing at Baobab? If that is even how you pronounce it as well.
That's
And
right.
what's the origin story of that name, if you don't mind? Now,
Yeah,
come to think of it.
yeah, for sure. So maybe starting with myself, then going to Baobab, and then I'll get to the origin story as well. I'm originally from Cologne in Germany, and made my way to the startup world in Berlin in the 2000s. Moved to the US and in moved to San Francisco. And in San Francisco in 2016, I stumbled into the insurance industry, like many would. So at the intersection of insurance and tech, of course, I was working as a venture capital investor over there, and decided that there is a gap in the US market that also happens, right? There's no working insurance price comparison like we had over here in Europe with like Check 24, Clark, and a couple others, right? And also, of course, similar companies in other countries. It's something that the US had never developed. So my co-founders, Hanno, Christoph, Pavel, and I, we decided to found Gavi, which stands for Get a Better Insurance, and is basically a price comparison shopping platform for personal lines insurance. We built that into the largest such company in the US, sold it to Experian in 2021 after raising a seed A and B round for $320 million. And then I decided at least to move back to Europe. My co-founders are still in the US. So when I decided to move back in at the end of 2020, it was also the time of COVID, of course. So I had a lot of time to think about next business ideas, and I had stumbled into the insurance industry in the US in the personal lines space, but we were in insurance distribution, platform distribution, but through that time, also working with insurance carriers, MGAs, the likes of Lemonade, Hippo, Root, and so forth. They were all on our platform. I also gained an understanding of how to build an MGA, and I thought that that's a pretty interesting challenge to build a company that actually underwrites the risk and not just distributes the risk. So I looked for like-minded people in Berlin, and we connected with Anton Voth, who was at the time the CTO of Koya, and he shared my passion for insuring risks, and we decided to go after the uh, initially cyber insurance domain, but always with an eye on emerging digital business risk, where of course cyber is the obvious one, but not the only line that one can go into. So we founded Baobab in 2021 and started insuring companies in 2022 for cyber. And today, we have three lines of business: cyber, tech, E&O, crime insurance, all with a view on digital distribution and the digital risk characteristics. And we are active in five countries: Germany, Austria, Benelux. Yeah, that is three there: Belgium, Netherlands, and Luxembourg, of course. So we've come a long way. Three lines of businesses, three countries, and the The way we're doing it, really, and that basically we can go, of course, much deeper into this. The way we're doing this, and the way and why we think this is absolutely needed to have a new provider in that space, is because we found a fundamental disconnect between the needs of the insurance companies, the needs of the end customers, and the needs of the brokers that actually sell and broke the business. We found that there is no unbiased risk mitigation and no integrated platform for managing cyber risk holistically. From a customer perspective, it's either just an insurance product, but the insurance product wasn't neatly integrated with risk mitigation measures around cybersecurity. There were attempts at that also in the past. So some carriers had worked with assistance solutions. There were also companies that had tried that, but it hadn't really clicked, right? So there wasn't really a product market fit there yet. And that's definitely something that we wanted to work on, because customers told us this is absolutely what we need. We're not looking for cyber insurance. We're looking to manage our cyber risk and mitigate our cyber risk. And cyber insurance is one piece of the puzzle, right? So the vision there is much broader. For the insurer or reinsurer side, the capacity provider side, there was a lack of understanding of what actually drives loss ratios. So there was no understanding that had developed on a technical level of what really drives underwriting results. It was mainly steered via the price, right? In a backwards looking way. And that's what we also saw 2020, 2021, 2022, and also going in the other direction, of course, in the soft market right now, right? So you had a good year, so everybody lowers prices, but there isn't really a deep technical understanding around that. So it was really driven by industries and basically a matrix type approach of what you want to underwrite and what you don't want to underwrite. And then on the distribution side, we found that there were many brokers who were struggling to really make the demand that was obviously there from the customer side work and really translate that into business results, right? Oftentimes they had started sales processes in cyber and these digital risk topics, but they weren't really able to carry through with these sales processes and actually make the sale. And oftentimes they then felt like there was a waste of time, and they hadn't really figured out the sales approach. And those were really the three components that we're tackling with Baobab. And those were the three components we're tackling day one, and that has stayed the same ever since. Zooming out a bit, because we can go, of course, much deeper into this, but we are headquartered in Berlin. We're 45 employees across underwriting, risk engineering, cybersecurity, of course, software engineering and product management, and also distributions to brokers, so broker distribution. We've grown nicely. We've raised a pre-seed, a seed, and a Series A round. Most recently announced our Series A round last summer was a 12 million round led by Viola Fintech and eCapital, a cybersecurity focused fund from Germany. And we're using that capital now to expand into new markets. So Benelux is something that we launched after the funding round. We are sharpening and going deeper into our cybersecurity value proposition. And we're building out, of course, our cyber capacity and also our capacity in other lines of businesses. So the most interesting topic that we're currently working on is also the crime insurance offering that we are deepening currently.
I would love to come back to your offer. Let's go a little bit deeper to the last point. Totally understood what Baobab are doing, but I put myself into the shoes of a broker, of a policyholder, of myself. I think, okay, I need to do something about cyber. Why would I call you and not one of the other cyber MGA? We had Kyle from Coalition on the show. There's Stoic. There are others, or they're specialized insurers, right? There's Markel, there's Hiscox. Why would I be very well advised to pick up the phone and call Vincenz and not one of the others?
Well, it really comes down to, of course, the value proposition and the offering that we have. So on the broker side, we're the ones who are really focused on helping brokers actually sell cyber. So we have a team of cybersecurity experts who, together with the broker, consult the customer on how they can become insurable, how they can improve their cybersecurity posture post-sale, and also onboarding the customer onto our platform, where we have a continuous monitoring product that keeps the customers safe. So if I would boil it down to really one statement as to why to choose Baobab, is if you're insured with Baobab, you have a lower probability of getting hacked due to the cybersecurity measures that we run across our portfolio of insureds.
I would say, and I think, I mean, the market has certainly developed. You're in it like in the fifth year, and I totally buy the point that a lot of insurers, they're not tech security, they're not security companies. They might kind of come from it from a liability aspect, etc., and they know how to manage insurance. And so, even though I would say, there's probably a Markel or a Hiscox is more innovative than some other, I don't know. I'm not going to name shame anyone, some other carriers. I would say that in terms of, let's call it active cyber, a preventative cyber, that's exactly what every cyber MGA does. I don't know a single cyber MGA. Well, no, that's actually not true. I actually know quite a few cyber MGAs out of the London market who build massive towers and kind of come from that kind of space. But I would say things like Stoic or Coalition, they do, and I think they're both also active in Germany. Would you say the argument from, is there something, or is it even worthwhile to say to broker, listen, is it then our product, our prevention is better, the premium, or is it, and I thought that was actually quite interesting, you need all of these things, but at the end of the day, it's helping the brokers activate their customers. That was actually one of the things that I've heard from anyone, even the traditional insurers back in the day. They only became successful when they were able to train the brokers to actually sell the product, which is not exactly the same as I don't know, whatever, business interruption insurance or property insurance, which they also need to deal with. What would you say between the more also well-funded startup MGAs is your value proposition towards either the policy or the broker, why they decide to go with you rather than the other ones? Because I don't quite, would just be interested.
I mean, why different companies decide to go with us, of course, depends a little bit on the needs of the company. Some are price focused, some are very cybersecurity services focused, right? So that is that of course is something, of course, that we're tracking, and we see really a split as to why companies decide to go with us and brokers decide to work with us, in the sense of the different ways of how these brokers work, and also the different customer segments. We can win on all of these things, right? So we can win in the category of fast, easy, and cheap, right? Not for everyone, right? But for a good risk. But we can also win in the category of most value added in terms of a hands-on cybersecurity approach. And to the question, or
But
to
how?
this,
I mean, that seems like a dual. It's just how can I mean I can think of, but where do you position yourself? And it's totally fair but if I had three of these things, where would you say this is normally what the feedback that you're getting, that is why they're going with you rather than someone else? Because I get the cyber MGA versus insurer proposition. I get that. I get but currently I still have, it's active cyber and broker support. I just really want. I think it's just helpful to I just really want to understand what's the difference, or your positioning.
The difference between what exactly?
But between you and another cyber MGA that also
Oh, okay.
has active cyber and goes into a call with another broker, because I do
Yeah.
believe that they've found out that they need to do that pretty quickly.
Yeah. Look, I think in terms of the active, so you're probably alluding sort of to the active cyber approaches of other MGAs in the market. The the approach here really is that we're the only ones who can prove that it works, right? So we can prove that our prevention measures across the portfolio in terms of our continuous monitoring prevent losses in the millions in our portfolio.
I have a question there. I bring up now the third angle, new breed of competitors. What I've been seeing recently is, apart from insurers, apart from MGAs and brokers, those software companies like VirusScan, like F-Secure, McAfee, all those, or even VPNs who are already very close to the potential customer saying, well, we help you with all your viruses and malware and everything that belongs. Now we team up with an insurer, or maybe they should team up with an MGA. Like, would you see them, one, as a new competitor? Second, same question as Nick's. Now that we worked out how to differentiate yourself from the other brokers or so, in terms of prevention, they can say, well, this is our core business. We're here, and don't call Vincenz anymore. Now call us.
So the question is how we are positioning against software companies that work in conjunction with insurers as a value-added
That is one of the
service.
That is one of the questions. Do you see them as competition, or is that maybe a hype? Are they to stay? Second, if you have these software companies, should they rather team up with somebody like you or with an insurer, or doesn't it matter because it's a dead end anyway?
Look, I mean, if you're talking about any type of cybersecurity software companies, I don't really see that as a competition. Because at the end of the day, this is what we would like our portfolio to invest in. Of course, in a structured way, in a way that has a clear strategy in terms of return on security per dollar invested. Of course, there's also the possibility that you invest into the wrong things in cybersecurity. But by and large, right, if you do it right, investing more into cybersecurity posture is something we strongly encourage in our portfolio. We help guide our portfolio companies in investing into the right things. We tell each portfolio companies what are the top 3, 4, or 5 things where we think they can have the highest return on cybersecurity. And we are not going to build cybersecurity software that rivals the likes of Okta or CrowdStrike. That's not the business that we're in, right? So that is therefore not really a competition that we see there.
Is it? Can you share some of the mechanics of and I don't need to, basically, I don't want to get the secret sauce of all the combined measures of how to drive profitability in the portfolio, because I understand that that's why would you want to share that? But maybe was there something counterintuitive? Like, what things did you assume would work, just really didn't have any impact? Why? So just to kind of make this, because otherwise, I still find it, for me, it's kind of hard to say we have the only active program that works. Maybe, I don't know. I just find it.
I'm not saying we have the only active program that works. I'm the one. I say we're the one that can prove it works, right? And I haven't seen the proof of others yet, right? So if they publish a proof, great, right? So I think that's
Fair.
that's fine. Maybe they can't just prove it yet, right? we know we can prove it. That's what I can say, right? And I think that our competitors are not so humble as they would like keep that so locked up for a long time, right? So that's all I'm saying.
Fair.
And coming back to what that is, right? And look, I think I can share that rather openly. It's really the technology that we have built, because it has to be at the end of the day our IP, otherwise it wouldn't work, right? So and there's really one key component of this, and I think I can be quite open about this today. All of these cyber MGAs have started with the value proposition of doing an outside-in attack surface scan of the attack surface of the companies they insure. And also now there's service providers who do that for your incumbent insurer, and that sometimes is something you can even get there as well. And what a lot of folks just looking at these companies now don't really understand is they say, okay, they all scan. Yeah. So if you all scan, what's the difference still, right?
Yeah.
But it's like
Exactly.
but the thing is, like, it's like saying you're sitting in a horse carriage or in a Ferrari, right? So there is a bit of a difference there if you really look under the hood. And
I get it. Otherwise, it would be the same. Like every insurer asks questions, and you kind of go, yeah, but it depends on how you ask the question. I get it,
yeah,
right?
but that's not even the same thing, Nick, because I never really got that when even large insurers said, but it's about how you ask the question. No, because I can see in your question how you ask the question. That's not your IP, right? I can read it, right? So, but in terms of how technology works, I think that's real IP, right? And I can tell you quite exactly what that is in our scan versus the other scans. There's several ways of doing this. You can scan, and when you scan and you use Shodan. Shodan is a great database. We use it sometimes as well, but it's not. It's you can't.
Can
just
you explain
base
what kind of
everything
database that is? What
it's a database of scans, basically. So it's actually an open source type project that scans companies and attack surfaces across the internet and builds a database of these attack surfaces, right? And there's several of those, right? And through these databases, you can ping them and say, hey, what is the attack surface of this logistics company like, right? And you send an API request and you get some feedback. And the feedback really is oftentimes a scan that was rather superficial, that was carried out a couple of months ago, right? And that builds somewhat of a profile that is oftentimes 60-70% correct. You can see whether ports have been open in the past or not. But it's really, if something is 60-70% correct, it's 30% of the time not correct. And then the question is, and I can tell you quite openly about this because we have done it the same way in the beginning, right? So we did that as well, right? And every single one of these MGA insurance companies did it that way. And then you try to use that in underwriting. Right, and then it really gets tricky because you start underwriting sometimes on wrong information, and because if something is 70% of the time correct, and then a broker really looks into this, or the customer really looks into this and say, okay, why is my price like this, and why am I or why do I have an underwriting rejection here? And you say it's because this and that port is actually open, but it's actually not.
It's like my telematics
open
box
anymore, right? It's
lying when I'm
anymore.
driving badly.
Exactly. Yeah. So it's but it's actually not correct. Then you run into a situation where you basically start questioning whether you should use that at all. Yeah. And there was a moment in time that our company was in where we asked ourselves, should we use this in underwriting at all? Because it's oftentimes not correct. Maybe it's a tool to visualize something for the broker as to what the cybersecurity looks like. Just to get a general idea of what the web-facing assets are. And we had to face a tough decision. It was either finding a provider that works or building it ourselves. And that would mean heavy investment. That is the case if you go through that flow. And I can get how you can get to that decision because we almost made it that way, right? But what we have decided is we took a different route. We decided to actually invest heavily in it. First, of course, I was fighting with my team and said we don't have to rebuild the scan here in house. It's not worth our time. It's so like there's so many companies out there. Find us the right provider, right? We talked to 75 companies, and I remember we were in a call with a company from Kazakhstan. Great team. They had built a great scanner, but at the end of the day, it was also then I think number 73 or so that didn't really fit our purpose. And then we said, okay, at some point, I mean, I think we're reaching the end of the rope here. I mean, we did talk to a lot of providers. Yes, there are a lot of providers out there, but we have to actually build something. And what it turned out to be is we needed to build something that has the accuracy and the depth of a Tenable. And Tenable is a very heavy type. Tenable is a very sophisticated scanner. Tenable is a publicly listed company. $1 billion market cap, a couple hundred million revenue with outside in tax service management. But if you get a Tenable subscription, you do that if you're a Fortune 500 company and want to manage your tax services. You pay maybe $1 million, maybe 500K. And we knew these products because our team had used them at different companies before and said, okay, we need something that has the quality of a Tenable, but we don't need all the function that Tenable has, right? So that's of course not all that we need. We need just components of that are important for our underwriting decision. Okay. There's tons of components we don't need, but we need them at that accuracy level. We built that out, and we went very deep into that. And then we had built something that worked great, but it took at the point of sale 12 minutes for the scan to arrive because it's just heavy, right? Because if you scan at the point of sale, you also need to make it work. We then took another 8 months to really get that time down to around 2.5 minutes at the point of sale via a modular approach and all that, right? So we have now gotten it down to 2.5 minutes across the board for small companies, smaller tax services, of course, less. And that really is the difference because our underwriting, our scan results can actually still feed into underwriting. They are accurate. And this is also the answer to how can we be fast and easy. We take all of the questions that we get answered to this, and this is 70% of what we need to know. We get through that scan, right? At the point of sale. And then you can also be fast and very easy if the scan results are good.
Is it because I'm outing myself as not a cybersecurity expert here in this conversation. So what I'm trying to visualize is, could you give me like a comparison of, previous scan, I don't know, a concrete attack surface? Is it that it's because now it's accurate? Is it that you go a little bit deeper to kind of get a glimpse of, listen, before that you would get X, and now just one component that's relevant and that like even a dummy like me understands, okay, that drives down risk. Because currently what I'm hearing is don't go for general purpose scans. They are they don't, and not because they're general purpose, it's just they don't drive down the risk. So you need to go into something more heavy, but you can't get a 1 million license per customer. Got it. So take certain components. Can you just give me one example of what that is? Because I'm just hearing qualitative, quite abstract terms currently, because I'm not, I don't even know what an attack surface is. Yeah. I mean, I can imagine from the name what that is.
And we're going deep into cybersecurity or somewhat deep into cybersecurity in an insurtech podcast, right? So I think let's try, right? So I can try.
But I mean, I would say if to run a cyber insurance MGA, if the nugget that you need to unlock is managing cyber risk, I think it's worth it.
No, it's definitely worth it. It's definitely worth it. No, and I appreciate the questions because oftentimes you just have to stay a little bit superficial on these questions, but it's great to explain them in a little bit more detail. So, a lot of these general purpose scans, most of them have not been built for insurance, right? They are just built by cybersecurity teams, sometimes open source, sometimes within companies, to basically as a standalone product to sell it as an analysis tool.
Okay.
What we've figured out is we really need to look into things that drive the risk and not into the rest. So they basically build profiles of what's going on the attack surface. The attack surface is really anything that you can see from the outside, right?
Okay.
So anything that's web facing, it's your website, it's your email service and so on, right? And anything that's online. And as you can imagine, the bigger the company, usually, the more you can see, right? Therefore, the more complex also these scans become. I'll tell you about two challenges that we had to overcome. First of all, most of these scanners are built with the logic of typing in one domain, and then they scan that one domain. And if you have a company that is small, you oftentimes just have one domain. But if you're going into mid-sized companies that have a couple 100 million in revenue, they oftentimes are companies with 3 different business units that have evolved over a couple of decades with M&A in different countries, and they probably have 20, 30 domains, right?
Okay.
So should the broker type in 30 domains?
Of course,
Probably
that's
not,
what he
right?
gets a commission for.
Yeah. Well, okay. Go.
I mean, he's got to
Go tell the
work for his
broker,
money,
yeah.
I'd say.
That's okay. Okay, go try.
He's not advising them on cyber, we've learned.
That's good luck with that.
I get it.
But all jokes aside, so that's a challenge. But none of these scan providers had really thought about solving this issue, because that's their billing model. They said, we bill per domain, right? So if we find other domains, we need to, you basically get an invoice that can balloon. So even from that standpoint, it wouldn't really work, right? For us, it was super important that we tie the attack surface to actually a legal construct of a company, right? To a group of companies. And we invested into asset discovery for that. So which domain, if you're logistics company with the name Smith, and you have a logistics that had bought a logistics company with the name Miller, to connect that and to also map that out. That is something that has to happen within those 2 minutes, right? And then you have to trigger 30 different scans and build the whole attack surface and with the different email domains. You then also scan the dark web for data leaks that are associated to these groups of companies. So there's very heavy lifting that has to be done. So this is something that these providers hadn't really figured out or didn't really see a need to figure out, because it wasn't really in their business logic. And that's stuff we find, that's not stuff we find, but that's the profile we need to build to even get an accurate picture. That's part one of the answer. And the second part, because you asked, what is it that you even find that drives the risk, right? So when you've built this attack perimeter, you then need to look for the stuff that's really important. What most of these scanners do is they look for what's called known vulnerabilities. Okay. So you have a known vulnerability in some Citrix VPN that lots of companies use. There is a vulnerability database. It checks against that database and finds that vulnerability. Pretty straightforward. And then usually there's a security update for that, and that's what you do. But there's also what is called unknown vulnerabilities, or very individual vulnerabilities. So
sounds like Rumsfeld, the unknown unknowns.
There you go. But what that is at the end of the day is you have built custom software, right? Or you've developed your own WordPress, whatever, your website, and your engineer has left the password in the code. That's not a known vulnerability that is somewhere. And it happens all the time, right? It happens.
Vincenz, I'm writing a Slack message to my CTO right now, telling them, delete the passwords from our code. Okay. Yeah. No, understood. Okay.
Yeah.
And I think and sorry for kind of digging in, but that makes sense. So I would say, in summary, in layman's terms, it's scanning attack surfaces in and of itself makes sense. You just need to create the whole picture. And you need to enrich it with other things that to get a full profile. Is that a fair summary of and because it's not everyone's business model to do these things, you either kind of get two small pieces that you then need to cobble together, and then you might as well do it yourself, or it's just too heavy for your purpose because their business model is just different, and you just want to identify the key things that drive down the risk and leaving a password in the code. If you can actually get that and find that out from the outside in, but some of them don't, then that would be one of the pieces driving your underwriting model.
Yes.
Cool. I have, and I know we have some other questions. I just wanted to, because there was this other thing. What we've now talked about is a scenario where a broker had either someone has approached a broker or a broker has approached someone and they kind of go, I don't know. Yes, I have a cyber exposure. I even want to talk about this thing. Now I'm just kind of thinking about the baker or something. How do like awareness? How relevant is awareness of cyber insurance? Because I see the danger of these things. Is I think you have the one extreme to say, of course, cybersecurity is relevant, but I don't need to pay this insurance premium. I'm reducing my cyber exposure, right? It's basically risk management rather than risk transfer. Or the other one is, who would ever hack? I mean, yeah, sure, but who would ever hack me? I'm a baker or plumber or, and I'm just curious whether that was 5 years ago and people are just like, no, the Russians are coming, everyone's gonna hack me, or I don't know, the North Koreans are coming, or is driving that awareness another piece of the puzzle that is actually something that you think about in terms of how it drives your business opportunity forward?
100%. Just giving you a quick overview of where we think that is. It's of course, as you described, a segmented approach. So the larger the company is, right, and the more professional, of course, the cybersecurity management. You have a chief information security officer and so forth with Fortune 500 or DAX or Euro Stocks or whatever companies, right? And then you go to this area below. The large Mittelstand companies, basically in Germany, where you have even $1 billion type revenues, oftentimes have chief information security officers as well. And then if you go to the segment under 500 million in revenue, you also have sometimes chief information security officers or the like, in terms of cybersecurity teams and clear responsibilities. And of course, there's lots of pressure on these companies now to be compliant with things like NIS2 and so forth. So they are actually at the moment heavily investing into cybersecurity on all different fronts. And then you come to the area of the smaller commercial topics. Here with those companies, you have also rising awareness. So I think it's rising across the board. I think the days of this patriarch in a company who just says we are secure and what does that have to do with me? Those days are almost entirely over. I mean, you may find one every now and then, but it's very, very rare. That's not the picture anymore. What we hear from companies, from professionally managed companies usually, is that they say, we know it's an issue. We try to do more. We're investing in it, but it takes time. And there's of course certain dependencies that we have to take care of. And our IT landscape isn't all that simple, especially in Germany, where you still have a lot of manufacturing-based IT with operational technology and so forth, where you have also then oftentimes a lower cloud penetration across these companies, where they say, look, it's just not something we can accomplish in a quarter or so, right? But I think the need they have all found. There is then another issue at play, which is the shortage of skilled labor. Cybersecurity experts are a rare commodity. Many of the companies that we find have open positions that they struggle to fill because oftentimes you have to speak the language and you have to work in the location of the company, right? So if you look at the German economy for now, you have companies in southern Germany and so forth in little towns where you then actually need to attract cybersecurity talent to, right? And it helps in these companies if you speak the language, right? So there's these types of challenges that you see also across the economy more broadly, that you also see, of course, materializing in cybersecurity, and because a lot of the good personnel is, of course, snapped up by the highest bidders, like your banks and your DAX companies and so forth, right? They of course also have these positions open. So that is more so what we're seeing. So there's a couple of blockers to that, but I don't think there is an issue generally in terms of that there's too little awareness. Still, we need to raise more awareness because that is general cybersecurity awareness. I think what we need to raise more awareness for is how does insurance play into this, right? What is the role that insurance has to play? What is really the value of the insurance contract at the end of the day, of the insurance policy? Will it actually pay out? Explaining the triggers clearly, and also explaining specifically how attacks can happen in their environment. Because what we see companies oftentimes make it, or at least having considerations of whether a cyber insurance policy is worth it in the context of their overall cybersecurity spend. But that's not general cybersecurity awareness. It's more cyber insurance awareness, I think, that we need to work on.
And let us together climb out of this rabbit hole a little bit again.
Whoa, what rabbit hole?
Back to surface
It's really
for
dark,
simple-minded people like myself, and also going back to insurance. Still, while and I think this is a nice turn towards cyber insurance, because cyber insurance still is at the moment the fastest growing product line. So where do you see the growth drivers over the next couple of years? What will be the next big things there, and why is the insurance part still important?
Yeah. So the growth, depending on how you measure the market growth, has come down somewhat, but that was also mainly driven by price reductions, right? So if you look at the policy growth, that is of course still going more strongly. I think big drivers are investments in cyber security overall. NIS2 compliance is a big driver that I have already mentioned.
Can you elaborate what that is, just for?
Well, NIS2 is a European-wide cyber security regulation where it doesn't apply to all companies, but there's of course the bigger the company, the more likely you are to fall into NIS2. That's the simple version of it. And it basically is a European-wide directive that is now being implemented in member state laws to ensure certain cybersecurity standards across the economy. And that isn't directly related to insurance. So insurance is not part of that, that you have to buy insurance or so forth, but it's around processes and documentation and compliance around cybersecurity measures that will then play into more investments, and it will also create a broader insurability across the board, where you can say, okay, if you comply with these measures, you can probably be insured. Because there's still, of course, also the group of companies that wants to have insurance but hasn't been able to get insurance, cyber insurance in the past, because no company wants to take them. And we think that will go away over time, or this group will get smaller and smaller, also with these mandated cybersecurity standards that we see coming. That is one big driver. The other driver is a bit harder to understand and a bit more volatile, but I would call it sort of the geopolitical environment, right? Because that also raises awareness in certain sectors with critical infrastructure and so on. And even though there's war exclusions, I think that the general trend towards further resilience across supply chains is something that also translates into further investment in cybersecurity, and therefore also further investments into cyber insurance. Those are probably the two that I would name.
So you think that, so they're not cannibalization, because you basically say you normally, once you start being aware of cybersecurity, you are aware of what can happen, and then you're also aware at some point when you look at it commercially that minimization is not as cost effective sometimes as transfer. Is that the thing? Because otherwise you would say if I drive down my probability of something happening, then my appetite to transfer it would reduce.
No, not really, because in a sense, what you're also doing is you're also driving down your risk premium, and therefore the transfer gets cheaper, right? So
Yeah.
there is an inbuilt mechanism of how the cyber insurance offer that you can make use of is reacting to that, and that also is saving your budget. And I think it's always a good idea that if you can actually drive down your premium through investing in cybersecurity, and you can get a couple million risk transfer for a business interruption, I think that's always a good idea if you really come to an assessment and do it professionally. Almost all large companies that do these assessments come to the conclusion that they at least try to get cyber insurance, because if you can minimize your premium, and there's different ways, right? High self-insured retentions, for example, and well documented cybersecurity, I think, is and well advanced cybersecurity is another one. And you can get a couple of million in terms of cover for also worst case scenarios. I think that's a great idea, because even if your cybersecurity is top notch at that point, it's always a race against time from a 0-day vulnerability to patching it when it gets published. And there's also things that you don't know in the sense of new attack techniques that can hit you. And if you're a company that has a lot to protect, I think that's always a good idea to buy that. And most professional insurance buyers come to that conclusion.
Conscious of time, and I take full responsibility here, we have this section sometimes, we call it the hot or not one. I think wasn't that like a precursor to Facebook or something? I don't know. That's where I gotten that from. But just I'll shoot a few ideas, and I'll just kind of want to get do you think that's a good idea or bad idea, and why? Screening the market for cyber buying signals, hacks, open IT positions, as you've mentioned, new partnership deals, etc., and provide that data for brokers to help them source new leads. For those of you listening, it doesn't look like a hot idea. It's the gut reaction that I'm getting on the visual line
well,
here.
if done well, potentially hot. Haven't really see that click yet. Yeah.
Okay.
Lukewarm.
Yeah. There is some companies need to buy cyber insurance, and so basically when you're working as a vendor to a large corporate, right? It's a procurement check. Now, anyone who has ever worked with large corporates, there is a long procurement and IT security thing, and there's this one question: do you have cyber insurance? But sometimes it's, do you have cyber insurance for this market to that limit? That's about it. Shouldn't, first of all, from a risk perspective, and you can decide whether it's from a distribution perspective, shouldn't large corporates be more interested in ensuring that cyber policy is actually working? Because otherwise, those vendors, depending on what type of services they do, they could really mess things up.
Probably yes. Or should I say hot or cold? I would say it's a good idea to check that, yes.
We take it as a hot.
Okay.
And do you find that brokers, that comparing terms and conditions for brokers against your competitors, and basically making it easier for competitors to say, listen, if you have an offer from some of the aforementioned companies and Baobab, here are really the 4 things why we're better, and not having them figure that out, or even having them have to go through comparison site if that's how they kind of reach you. So basically, helping them compare quotes on your own terms, if you like, with your narrative. Well, still being accurate, obviously, but with your narrative.
comparing quotes in a sense of
wording. So I'm thinking, if I'm a broker, I need to compare. I need to give them 3 offers or something, because that's what. And now I poor sod need to actually compare the wordings from Markel Baobab Coalition. I'm like, oh fuck, this is a lot of work. And maybe hopefully these days they actually start with and they chuck it into a whatever LLM of their choice, and there comes something like, maybe that's all right, and then they'll send it out. But wouldn't that be something that as a tool could be helpful for you to help brokers find it easier, not just to get a quote or an offer, but then to sell that in your interest to their customers, which is then to say, we've got 3 quotes and that's why Baobab is better. And you basically help them with that narrative.
Well, I think most companies do this. We do it as well. I mean, you, in a way that you discuss with the broker what your key parts in your policy are, what your policy components are, how they work, what your sublimits are, also how different clauses are worded, to see whether we have broad coverage or not, right? Or basically presenting your coverage there. At the end of the day, the brokers that we talk to then take that input from all the companies that present this and create their own comparison, because that is also at the end of the day what they are liable for, right?
Sure.
So that's I think where that hits a bit of a hits, of course, some limits, right? So if you would just say, okay, here's a large insurance company and they have actually compared their product to others, you would, as a broker, of course, would say like, well, I would probably want to double check that, right? So that's what brokers, of course, do with their heads of cyber and so on, and with their teams.
Okay, so lukewarm, maybe hot, lukewarm. That's fine. Listen, I asked, that's fine. I asked the questions,
Yeah.
I gotta deal with the heat. That's absolutely fine. Ron, anything else before we
I think I
get to
had
the
a
finish
very
line?
smooth sailing today. But it was super interesting. Listen to you, and I pass the question on to you, Vincenz. Is there any topic you think we haven't touched at all, but we should?
Well, I don't really see any big topics that you haven't touched upon. I don't want to now take a big advertising
Take a
block
short
out
advertising slot.
for
Take a
Baobab.
short advertising, and if we find anything, we just invite you back.
Yeah.
Well, what I can say is, of course, to anyone who wants to work at a great sort of MGA for digital risk and wants to understand the future of that part of insurance, they should check out our job section to see if there's something for them. That's one part of the advertorial. Also, to the second part is, any brokers who are interested in learning more about this should also contact. And last but not least, probably most important, customers should come to us via their broker, for example, if they have one. If not, I'm sure we can find a good one for them as well.
Awesome. Vincenz, thank you very much. Ron, thanks for letting me go down that rabbit hole with Vincenz. And have a nice weekend, everyone. And everyone, thanks for listening. Hopefully, if you find that anything that Vincenz kindly shared, you want to expand on, or post these when we share this on social media. And everyone, a great start into the year.
Plus, see all of you at ITC London. It's just 2 weeks away.
That is true. That's true. See you at ITC London. Awesome.
Have a good one.
Bye.
Bye, everyone. Bye, Nick. Bye, Ron.